Hello, I'm Inley Gooden. Welcome to Market Force's webinar, Insurance in an Automated World, hosted in association with Appian. Now, automation has inspired excitement and fear among employees and consumers alike. The media's full of predictions about robots taking jobs, embedding themselves deeply into our lives, and also even snatching control away from us. But beyond the continuing sci-fi stories, what's the reality of automation and its positive impacts on our behaviors and lives? And how will insurance operations, models and propositions adapt and thrive? Well, that's why we're here today. Over the next hour, we'll be discussing everything from the role of automation across departments, how automation could fundamentally change the role of the insurer, and how to put yourself at the heart of the new competitive landscape. Before we do that, let's meet the fantastic panel we have with us here today. To my left is Steve Jackson. Hello, Steve.
Good afternoon, Inley. It's a pleasure to be here.
Good to see you, Steve. Steve is head of financial crime at Covéa. He spent more than 22 years as a police officer and since then has served for 17 years in counter-fraud. He leads the development of internal and external counter-fraud strategy, encompassing both claims and underwriting fraud. He's also chair of the Insurance Fraud Investigations Group. Great to see you today. Next up, we have Parul Kulgreen. Hello, Parul.
Hello.
Good to see you. Parul is head of M&A and innovation at AXA. She's responsible for inorganic and innovation strategy across the group's general insurance, health and asset management businesses. Parul's a member of the AXA UK Seed Fund Investment Committee, which invests in fintech, insurtech and digital health startups for the AXA Group. Great to see you too. Next up, we have Michael Muzio. Hello, Michael.
Hello, everybody.
Michael is the CEO of Now4Cover. He's a member of the CII Underwriting Faculty Board, having spent 14 years at Towergate, where he helped to build and shape it before leaving in 2013. Since then, he founded and now runs Now4Cover, a digital personal lines intermediary. Great to see you too. And fourthly, we have John Koppel. Hello, how are you today? You well?
Good, thanks, Inley.
John is CEO of Zurich. Before this, he held various roles at ISG, including President of EMEA and Asia, and President and Chief Marketing Officer too. Great to see you.
Thanks.
And finally, we have Jacob Sloan. Hello, Jacob.
Hello.
Jacob is Industry Leader Insurance at Appian. Now, Jacob brings extensive experience to Appian as a change leader driving strategy and business transformation in the insurance industry. He's held senior operations roles with Farmers Insurance, including frontline insurance and licensed field operations, and served as CIO of Aon National Flood Services. Great to see you all. Thanks to Appian for supporting our webinar today. Couldn't do it without you. Okay. Over the next hour, we'll be covering lots of ground, and many of you will have your own questions and comments for us, so we want to give you the opportunity to put them to our fantastic panel today. It's very simple. Send them in throughout the webinar, either using the Twitter hashtag, which is AutomatedInts, or the question section right here on our webpage. If you're watching us live, we'll get to as many as we can towards the end of the discussion. So let's get started. Why has automation become such a hot topic? Steve, kick us off if you can.
It's an interesting question, and I'm going to pick up on the fear factor that you mentioned a few moments ago. I've seen the evolution of claims and counter-fraud over the past 17 years, and it's fair to say that the industry has grown. We've taken on a lot more work, and I've seen the process streamlined and to the point where the touch points are increased and people are spending less time talking to the consumer. The opportunity out of automation means that we will have greater opportunity to work with the consumer.
And it is partly driven by the customer, by the consumer. But Parul, is it completely driven by customers, or there are clearly many other elements to this?
So if you see the scope, size and velocity of automation, a lot of it is impacting the customers in the most profound way. There's connected data which is emerging from their mobile phones. There is data from smart cities feeding in where they're moving. There's driverless cars. All of these things means that customer wants to know exactly what is happening in the environment around them, and that includes what is happening with their insured life. The risk management that he has outsourced or she has outsourced to an insurer. So if I can get immediate information and answers from Facebook chatbots, why can't I get it from AXA or Aviva?
Yeah. It's important to remember the customer in all of this. Obviously, we are customer-centric, customer-focused these days, but actually understanding the principles, and that's all we can go through in the next couple of minutes. The principles are also important to remember that the customer journey has to be served well, and we want what we want, when we want it, how we want it. Steve, you know, how important is the customer in this entire automation and, you know, technical process?
You know, the customer is at the heart of everything we do. We don't do what we do for our sake, it's for their benefit. And ultimately, we want to deliver the best service possible. That often means spending time and doing the job better rather than rushing it. And automation means that we can do that more effectively and deliver a better product and a better solution.
Yeah. John, what do you think?
It's about speed. Customers demand speed. We've not historically been necessarily the quickest organisations to respond. But as an industry, we're about moments of truth. We're about very important moments in the lives of our customers. So we've got to be able to move at the pace that they require. Yeah. Most of them would expect us to be able to respond within a day, many within an hour. And there are plenty of insurers that are starting to operate at those kind of paces and quicker.
Clearly, some departments will be affected more than others. Jacob, what do you think in terms of the main focus for, in the first case, automation?
Certainly. So if you look at, say, policy processing or the claims channels where policyholders interact very frequently, you see those being ripe for efficiency, working through to make those improvements, and those are some of the two areas initially that are certainly in front.
Yeah. And Michael, what do you think about the key areas affected, but also the advantages of this route that most people are going down, but some are still behind?
Yeah, I mean, to quote Jeff Bezos, I think the best service is no service. And so, we've got to be realists. We're selling insurance, and who actually wants to spend time interacting with the insurance provider? So what automation and, in essence, digitization can do is actually take away the need to interact, particularly with more connectivity. So that a lot of stuff is done behind the scenes for consumers, so they can just get on with their lives, but knowing they have the protection behind the scenes should the worst happen, and then we can step in.
I think it's worth mentioning, though, Lindley, we want to develop processes that improve efficiency and deliver solutions more quickly. But an interesting piece of research that was done a few years ago looked at the different generations and what their expectations were out of insurance and with regard to interaction. Many people want access to information and data quickly and easily. I think the other thing to remember is, though, that younger generations still want access to people and to have a conversation at certain times of that process. So a combination of the two is important.
And John, we spoke about this before we came on, didn't we? There is research from you as well.
Yeah, I mean, we've certainly looked at it, and I think I would echo those points. The customer contact, the personal customer contact, is an essential part of the value proposition for us as insurers because of the nature of those moments of truth. They're very personal moments. Depending on which line of business we're talking about, they are very personal moments. So it's important that there's human interaction in that. I mean, if the automation is focused behind those scenes at the efficiency of underlying processes and back office processing and taking some of that complexity and problem processing away, it allows the customer-facing personnel more time with better information, better access to information to support that customer need at that time.
And you're absolutely right. In order to deliver a great service that's almost real time, then of course automation and the processes behind it have to be there. But the industry has a lot to do still, Jacob, to move past where we've been for such a long time, which is shuffling paper in the back rooms.
Yeah, exactly. And so what we see now is that we're well on our way, but those efficiencies, it's primarily in the areas of efficiency. And so that's where, if you look at insurers that are trying to differentiate and move off of maybe legacy policy administration systems to be able to address differentiation and to be better, be more nimble in the market, that's where we're starting to see that shift. Yeah. And unfortunately, there's no one size fits all. No one single path forward, and so that's where maybe some are struggling still.
Well, before we drill into the detail, just it's actually something we haven't spoken about before, but just a one-word answer in some ways. If there was one particular area which was either internal or customer that you think we should be focusing on now as insurance companies, internal or customer, Jacob, what do you think? We'll go around. Jacob, what do you think?
Customer.
Customer?
Customer.
Okay.
I think the clear ground, there's clear ground internally that we haven't touched yet. I think some of the early focus has been on the customer. There's more needed, but there's plenty of areas and departments within insurance that haven't been really addressed yet.
Right now, internal needs some attention. Michael?
Definitely start with the customer, innovate and be patient as well, because we're in insurance and nothing happens quickly.
Parul?
I would echo everybody else. It is the customer, but it's not about customer as we see them now as insurers, but as customers are evolving. We tend to freeze customer in time, which I don't think is smart business.
Yeah. And Steve?
Yeah, customer expectation is important and being clear about what they want out of these solutions. But we have an awful lot of work to do amongst many insurance companies where we've got lots of legacy systems, and the infrastructure just isn't ready for some of these solutions yet.
Okay. Oh, well, let's move on. We've got lots to cover. Let's get into the future of digital in insurance as we can see it right now. Back to you, John. What opportunities does RPA, robotic process automation, start to create already for you?
It creates a lot of opportunities. We've touched on some of them in terms of the speed, and impact it can have on the customer element of it. But clearly, there's an efficiency play for us as insurers processing it at such scale, and clearly we would seek to benefit from those efficiencies. There's also risk reduction in some of the more convoluted and complex processing steps that we have to take, perhaps because we've built up too much legacy of the past, or we're having to operate around a number of legacy systems. But I wouldn't underestimate the positive impact that risk reduction can also have. It does leave us with new issues of managing a bot-heavy environment. But those are, there are means, there are tools, there are methods for us to start to engineer that correctly. I think the more interesting element as we go past RPA, which is a method of automating some of the more antiquated processes of the past, and we start looking at more AI kind of more intelligent automation, then we really get into some interesting areas and can start to touch on those other areas of the business, particularly in actuarial and underwriting spaces.
Particularly with data being so important for data to be tied together and connected as we are at the moment, then if you're reducing inefficiencies and risks, even just in terms of the input, we've also seen those videos with human on one side and the bot on the other, working through that data input. So that can also help the connectedness. But Parul, machine learning, as we move into that, what role does that play, do you think?
So machine learning is a compute method for artificial intelligence. Now, if we break down into simple stuff, machine learning is supervised machine learning, which we have been using for ages, predictive analytics to predict whether there is a propensity to claim, propensity to flood risk. We use huge amount of independent variables to draw out what is the loss risk in a particular event. And then there's unsupervised. This is a new kind of machine learning technique, or relatively new. Here we use a whole lot of data from independent sources to drive out insights, say clustering data about customers from social and everywhere else to see what is the product that the customer has the most propensity to buy, and give them right kind of environment and right kind of information for that particular product. And finally, there's reinforcement learning. Now, there's really bad stories from Tay, the chatbot, which went haywire and racist. But reinforcement learning, what it does is it teaches the machine through trial and error to respond like a human being. Yeah. Now, we are very far in evolution of that. We still have Tay moments, but this is an important area where it moves from artificial narrow intelligence to artificial general intelligence, so moving to be more like human beings.
We will all find our own applications within our companies to how that works, depending on your customer relationship and the channels they're using, and also your processes internally. But Michael, in terms of risk, I guess the advantages are clear, aren't they?
So I think what's really important is at the moment, I think most insurance products are built for the average. And actually, it's relatively straightforward to kind of answer questions on those products, because pretty much everybody gets the same. The journey we're on is actually to build a digital proposition, which means nothing's fixed. And so what that means is every customer gets their own contract. And imagine a call centre, answering queries on where everybody's got the same, got a different policy wording themselves. It's pretty much impossible. So that's where technology really can be utilised to understand the risks of that customer much more effectively, to price them accordingly and deliver that product back to them, because everybody's different. We're all different. We might think we're kind of average or the same, but we are all unique as people, and we've got unique needs, unique insurance requirements, and so the products that we offer to the customers have to be relevant, have to fit them, and that is all about making it digital. But that does come with, you create your own new set of problems around understanding the risk, being able to price them and deliver the product to them accordingly.
Jacob, it's such a big question in complex and non-complex or less complex risk. The $6.4 billion question is, how much use, how should I advance my working with AI in those areas?
Certainly, so it's probably noted, for non-complex risk that is narrow in scope, you're seeing it advance very well. As you get into the more complex risk, a lot more variables there. So insurers look to go, into their systems, access all that data. That's where you see a platform like Appian come into play, because we can go into a lot of those white space areas around existing legacy systems and work through that. And certainly a lot of work there still to do.
Yeah. Underwriters. It's a question that will come up every day of the week, in terms of the huge skill and the predictive work of underwriters. But, what is the role of the underwriter? John, can you give us your feelings on how that will change?
At the moment, they're absolutely critical to everything that a traditional large-scale insurer does. And I think the skill of underwriting will remain so. But we've touched on it in different lenses here. The sources of data are very different to how they used to be. And actually, there's much more data available. And there's much more sources of insight that the underwriters can use to better assess risk and better price that risk. Previously, large insurers have relied on their internal data sources, which, I don't think I'm releasing any industry secrets to say they're not necessarily structured. The data is not necessarily structured and made available to underwriters in the way that they would perfectly desire it. And that's a real challenge for a large-scale insurer. But it's interesting to see market entrants can come in with relatively no data histories, using modern open source data sources and effectively price risk and compete. So, there's a huge competitive dynamic shift that's, forcing everybody to wake up. And for us to really leverage these capabilities, organizing and understanding our own data is absolutely critical.
I think a lot of insurers have actually lost the ability to underwrite over the years. It's been more data driven, pass it to the actuaries, they give you the answer. But actually, I think we're moving to a world where risk is becoming much more conceptual. And for the time being, until the machines get really smart, then actually the human brain can really comprehend that much more clearly than any data can. And it's that ability to understand risk, understand how risk is changing, how to then integrate that into the products and the pricing routines that we're selling. So we look much more forwards about how the risk landscape is changing. So I think we need, as an industry, to recapture the art of underwriting, which is really understanding conceptually what risk is like, how do we price that?
I'm surprised you say that. I mean, it's having worked with a lot of underwriters over the years, the skills are still very much alive and well, but actually potentially, depending on the data they're handling and their systems that they have that information coming in, they actually have more of a hand on it. They have maybe more of an active role in it. That seems to vary between underwriters that I've certainly worked with.
I think it's worth saying, though, there's an opportunity for more refinement as well. Whilst I don't work in underwriting, what I do see is in some cases, a fairly broad brush approach to underwriting, selecting risk by maybe geographic location, and not thinking about the individual as much. And we can do more of that, because the data that we have access to now means that we can be more refined and underwrite based more on the individual, and maybe underwrite in high risk areas once we understand it.
So Stephen is exactly right. It's the movement from historical-based underwriting to dynamic risk. You have usage-based insurance giving you live data on where your car is moving. Why would you rely on historical claims data and spurious correlation that underwriter, through their bias mentality, have built in? Why would someone living in Hackney be a bad risk for all years to come, despite managing their risk much better? So these spurious correlations and biases that underwriters as human beings built I think there is a great opportunity if algorithms are built correctly that these biases will be ruled out and you will be priced fairly based on your risk rather than imputing for the whole area.
So we're talking personalisation.
Yes.
A lot more personalisation. But surely the skills of the underwriters, and it's a wider question about the skills within your organisation, need to absolutely work with the systems that are now hopefully going to predictively offer you better information, better insight that is more tailored. Is that in terms of the skill, we'll keep it really short, in terms of the skills needed, you need people who can understand, not cherry pick, understand that information and accurately take that into insight that you can use.
Absolutely.